walk you through the claims process so you know what to expect. This can sometimes be a little bit burdensome and a lot to take in. Maybe it's your first time ever going through a claims process before, so I want to just briefly walk you through that so you know what to expect, you know what to look for, you kind of know what to do at what stage. In some future videos, I'm going to break down that into more detail, but for now, I just want to kind of walk it through briefly and sort of talk about some of the main points of each step. So the first one is when the storm event happens. So this could be a windstorm, this could be a hailstorm, this could be some massive rain event, whatever it might be. But the most important thing to keep in mind when it comes to a storm event that is worthy of opening a claim is the insurance terminology of sudden and accidental. So keep in mind, is this event a sudden and accidental event? If it's not, they likely won't open up the claim. Sudden and accidental means like hail just hit your house. That was a sudden storm, completely accidental. It wasn't your fault by any means. Or maybe even a windstorm. Fires, that's also a sudden and accidental event. Even if, and I hate to say it, even if arson had occurred, it's accidental on your part. So when it comes to leaking that's been going on for a long period of time, maybe you have some bubbling coming off the ceiling or you got some paint dripping down the walls, that's probably not sudden. It's accidental, absolutely, but it wasn't sudden. So it has to be sudden and accidental. Okay, the next thing you're going to do, step 2, is a contractor inspection. So notice I did not say call your insurance company yet. Never call your insurance company right away. You don't want your insurance company to get on their radar that you're opening up a claim and have them come out there and do an inspection. And as a matter of fact, a good insurance company is going to recommend that you contact a contractor first anyways. So just avoid that phone call, avoid that step. If you think you have damage that is caused by some sort of storm event, you think that it might be worth opening a claim, contact a contractor that you trust, have them come out and take a look at it. Now, a good contractor is going to not just look at the work that they do, they're going to walk around the entire property and they're going to try to document everything that they find. That's something that we do. We take a photo of all 4 sides of the house and all 4 corners of the house. We walk around the ground first and try to find every single piece of evidence that would indicate a storm had occurred. Then we go up onto the roof and we do the exact same thing. The reason for that is that we want to act, if we believe that you have damage, we want to build up a list of evidence that shows that you do have damage. That's going to help us down the road with holding insurance accountable when they come out to do their own inspection, whether they're new at it or they're a veteran, and making sure that they are finding the same stuff that you are at the very least, or that we did at the very least, okay? So number 3 is open the claim. Now, this is important because you don't want to always open the claim, and it's up to the contractor to be completely transparent with what they found. That's what we do. So when we go out there and we do an inspection, if we don't believe that you have enough damage to open the claim, or we don't believe you should, based on certain extenuating circumstances, we're going to tell you that. We're going to be honest with you. We don't need to get the job. We want to make sure that you are taken care of and you feel like you're being taken care of. So when you go out there, if we don't believe that there's damage, we don't believe that there's a danger of a leak occurring because of what had occurred, we're going to tell you don't open the claim. But if your contractor does say, yes, there's enough damage here, I do believe you should open a claim, it's at that moment that you contact your insurance company and you get that claim opened up. Sometimes it helps to have the contractor there to help walk you through that conversation with the insurance company, because everybody's a little bit different. Sometimes terminology can get mixed up, and you really want to make sure that you're painting the big picture of the situation you're dealing with so that the insurance can come out and be fully equipped when they come out and do the inspection. So when possible, have the contractor there with you when you actually make the claim or open the claim, especially if you're doing this for the first time, all right? Now, it's at this point sometimes, and this is something that we do, but we might give you what's called an insurance representation agreement to sign. All that states is that you're working with us and you want to let your insurance know, hey, I've got somebody in my corner. They're going to represent me. And if you do find that there's damage, they're going to be the ones to take care of it. That insurance representation agreement allows the contractor, in most cases, every situation is different, but in most cases, it allows the contractor to work on that claim on your behalf, meaning contact your insurance on your behalf, so that you don't have to get mixed up into the middle of everything in this kind of convoluted mess of an insurance claim that can sometimes be confusing. So if you have a contractor that you like, you trust, you know them, and they give you an insurance representation agreement, and you already know that if you have damage, you want to work with them, you might as well get that signed, give them that permission up front to work on your claim and communicate with them. So that, and if you have any questions, of course, they can answer it for you, but it just kind of helps speed the process along, because insurance claims, they can take a while sometimes. So sit tight, let us go to bat for you, and fight for you if we have to. Hopefully we don't have to, but let us do that. That's what we do, all right? Then we move on to step number 4, which is the inspection from the insurance company. Now, I wrote in here adjuster inspection, and I actually put asterisks in here. And there's another video after this one, I think it's actually the very next video that you're going to watch, that kind of breaks down the difference between what an adjuster is, what an inspector is, what your agent is, because they are all different people and they all have different roles. So really quickly though, the inspector is going to inspect the house. The adjuster is going to figure out if you have damage or not and give you a claim. All right, so sometimes they come out together, sometimes they don't. But the first thing that's going to happen is the inspector needs to take a look at the house. They need to look over everything. They need to see if they can identify damage on their own. And that's when the claim, almost dropped my marker there, that's when the claim goes from no chance to we got something here. All right. Moving on to claim review. Let's go ahead and assume that because we've gone this far, because we have advised you to actually open the claim, we have a pretty good shot of getting it open, because based on our experience, there's damage here. Maybe we have a hair report that actually shows damage. Whatever the case may be, the inspectors come out, they've done their inspection, the adjuster agrees that it's damaged, and they're going to give you a claim. At that point, you should be getting claim paperwork. That paperwork will actually break down everything that's being covered by the insurance company, which, again, I'll break down in another video, but it's going to break down what those items are, how much they're covering it for. That's the paperwork that the contractor needs. We need to be able to look at that and know, all right, do they have everything covered? Did they miss anything? Are there code upgrades that they're missing, they're not accounting for? Are there any PWI terms, which I'll go into later on? It means paid when incurred. Or are they overpaying on this claim? That's really important to know, and I'm going to go into that in another video as well, but it's really important to know where is the financial stance of the insurance company as it relates to your property. That changes how the claim and how the work is actually done later on, okay? And the last thing is that the work is done. It's when we actually get out there, we complete all of the work. We have to send an invoice out to the insurance company letting them know, hey, this is all done, and either one, everything worked out according to plan, you got everything covered, and we're just going to invoice you for the work that you already said you were willing to pay for. Or two, hey, we found some things while we're up there, we need to do what's called a supplement, and here's the original claim, the original bid, here is a little bit extra on the side, because maybe you didn't account for the permit costs. Maybe you didn't account that there's some code upgrades or decking that we couldn't see until we got into it, all right? With that, we might have photos, we might have documentation, we might have the permit passed, the final inspection passed. That all might need to go to your insurance company. That's what we do. Send that off to your insurance company, and we send you a final invoice, because what's going to happen is your insurance company is more than likely, doesn't happen all the time, but it happens most of the time, they're not going to send us the money at the end of the project. They're going to send it to you, and then you're going to have to send the money to us after you've gotten it. So we send them all the documentation that they need to show them, hey, work is done. And then we send you an invoice to tell you, hey, work is done. You can expect this from the insurance company. All right, so I want to start off with why insurance is even important. Why do we even have to go get insurance on our houses? Why do we have to pay into a premium every single month, and then we also have a deductible to pay on top of that when something happens? Why do I even need it? Well, the reason why insurance is important is because from a financial standpoint, it's very, very expensive to have to cover the cost of damage in your home, damage that you don't typically plan for ever. And so insurance is a vehicle for you to pool money from other individuals to help cover the cost of losses that you might have. So insurance is very, very important. Another question that I might get in regards to the home, in regards to the roof with hail is, why do I even need to get my roof replaced on hail damage? Like, what's the big deal? Well, one of the biggest things that happen when hail hits a roof, and the reason that insurance covers it, is that it increases the likelihood that you're going to get a leak on the roof. What happens, and this is particularly with asphalt shingle roofs, that's usually what's covered. Insurance will vary their coverage based on what you might have on your roof, or as your roof rather. But when it comes to asphalt shingle roofs, what happens is at the point of impact, the shingle is damaged on two sides. So a standard structure of an asphalt shingle is you've got an asphalt mat, and you've got your fiberglass interlay in the middle, and you've got another asphalt mat on top, and on top of that you've got these ceramic granules. That's what gives it all the color, all the dimension, all that stuff. Well, those ceramic granules are actually protecting the inside structure of the shingle from UV radiation, from rain, from snow, ice, things like that. So at the point of impact, when hail hits a shingle, two things happen. One, the granules get kicked up. So the force hits the shingle, and that force has to get expelled in some direction. One of those directions is back out, and it kicks those granules off. So now those granules aren't there to protect the inner working of the shingle. The second thing that happens is at the point of impact, on the bottom layer, that bottom asphalt mat will actually get a micro tear at the very bottom. So let me draw this out for you. So to start off with is you've got your bottom asphalt mat, you've got your interwoven fiberglass here. I'm going to draw it like it's thicker, even though it's not what it looks like. You got another asphalt mat sitting on top, and you got your roof granules sitting on top up here, okay? When hail hits, the first thing that's going to happen is the force is going to work its way down. This force is going to kick granules up and out, and you're actually going to create a micro tear on this side. So now you have your top asphalt mat at the point of impact has a divot where there's no more granules. You got your interwoven fiberglass mat on the inside, and then this bottom asphalt mat actually has a micro tear. So this point of impact has actually become thinner. So the granules are gone, the bottom half is torn, and now we have this fiberglass mat on the inside that's exposed. The fiberglass is what holds it all together, holds the whole shingle together. So when you kick off those granules and you micro tear the bottom half of that shingle, now the only thing that's really holding it together is that fiberglass, and it's going to break down a lot faster with UV and with rain and all the weather that we get, especially out here in Colorado. So that's the reason that insurance actually covers it, and it can be very costly. So you want to use the power of pooling with other people to get that covered so you don't have to pay so much out of pocket. I also want to dispel a myth of, well, what happens if my premium is going to go up? If I open a claim, my premium is going to go up. And I hear this all the time. And yes, there is a chance that your premium will go up. But just because you open the claim doesn't mean that your premium is going to increase. As a matter of fact, just because you open a claim doesn't mean that your premium is going to increase. Generally speaking, it's based on a geographic area. If a lot of people are opening up claims often in that area for that same reason, or that storm event, like maybe it is hail, you get a lot of hail, your premiums might go up after that. But it's not because you open up claim this one time on your roof and that's what did it. That's just not the case. So that is a myth. The reality of premiums is that every single year, insurance companies get together and they redesign the policies that they're giving their homeowners. So there is more likely to be the case that your premiums are going to go up on their own with or without you opening a claim. Does that happen all the time? No, it doesn't. But the insurance companies have the freedom at any point to change what their policies are covering and how much they're covering it for. So you may never open up a claim and your premiums still go up. So opening the claim is not going to increase your premium so much as just they go up over time. Inflation happens, policies change, risks go up, things change in the environment, and as a result, your premiums might go up, your deductibles might go up, the coverage might go down. It really depends on where you're located and the history of events that are occurring in that space. All right, let's talk about the difference between the three main people that are involved in your insurance claim on the insurance side. So the first one is your agent. The agent is the first one. You know him pretty well, most likely, him or her. They're the ones that actually set up your policy. They're the ones that will sit down with you and go through every single, or they should be going through every single line item that is applicable to your property. And it tells you what your coverage is, what is not included, what's not covered, and how much the coverage is for, in addition to what deductibles you might have to pay if an event related to that type of coverage actually occurs. So they just write up your policy. They're the ones that have a personal relationship with you for most of the time, but they're just there to write up the policy, make you aware of what you're covered through or what coverage you do have, and that's pretty much it. That's really the extent of what they do. They're not really involved with the actual claims process. Now, they might be the person that you call when you open the claim just to let them know, but they're likely going to be the one that tells you, hey, go have a contractor look at it first and then open up the policy, or open up the claim rather, if they actually find damage. But they're not really going to be the one that has really anything to do with the claim at all. They just set up the policy. The next one is the inspector. So the inspector actually comes out to assess the damage on the property. They look for all the damage. They're the ones taking photos all over the house. Now the contractor is going to do their own inspection, but the insurance company needs to do their inspection as well. And oftentimes, especially nowadays, they don't actually send out an inspector from their office or from their company. They send out a third-party inspection service. They'll come out, they'll set up their own ladders, they'll do their own inspection. And what this allows is the insurance company to send somebody out that's not biased towards either opening a claim or not opening the claim. So they kind of eliminate that bias mark that a lot of people think that insurance companies have when you open a claim. Send out a third-party inspector, let them take all the photos, let them try to determine what's important and what's not, mark up what they believe is damage, and they actually take all those photos and send that into the next person, which is the adjuster. The adjuster is the person that actually confirms or denies that there's damage there, and then issues you a claim document and sends you a check. It's the adjuster that really holds a lot of the power here in terms of a claim. They're the ones that are going to review all the photos that were taken. They're going to review recent storm data and see if the damage that's on the house, if there's damage, lines up with the storm event that we have a record of. And if it does, and they determine that there is a claim there, they say, yes, this is an approved claim. They print out the entire claim paperwork, pretty much what they're covering, how much they're covering it for. They send that out to you along with the check of the ACV amount. Now, don't get hung up on that term. I'm going to explain that in another video, but that's what their role is. They'll either confirm the work needs to get done, or they're going to deny that there's damage there related to the storm. Now, it's really important to know that if they deny that the damage there on the property is related to the storm, that doesn't mean that you don't have damage. That also doesn't mean that you don't need a new roof. All they're saying is the damage we see does not line up with the storm that was supposedly had hit, or maybe there wasn't enough damage, whatever the case may be. They also might have it wrong, and that's when your representative, the contractor, that you sign the insurance representation agreement through, they should be representing you, and they should be fighting for you, especially if there really is damage there and the insurance company missed it. You want that contractor to fight for you. They're going to go to bat for you and make sure that it actually does get covered if it rightfully should get covered. And all of that's done through the adjuster. Alright, it is time to break down different terms that you might see on your insurance claim so you can kind of better understand what it is that you're looking at, what does this dollar amount equate to, what does it really mean, and how does it all come together to finish out your claim. And it also helps you understand what to expect in terms of an invoice from the contractor and what you can expect in terms of what the insurance company is actually willing to pay out. So let's dive into that a little bit. The first one is your ACV. The ACV is the actual cash value. That's what it stands for. So the best way that I like to explain the ACV on a policy or on your roof is imagine your roof is worth $20,000 when it's brand new, okay? But that was 10 years ago. And let's say that it has depreciated in value $10,000 over the last 10 years, so 50%. Okay, so at the time of the event, the actual cash value of that product or that roof is depreciated 50% from that 20,000, so it's actually only 10,000. That's what the product that got damaged is worth at the time of the storm. That's essentially your loss. That's what you lost. So the ACV is the actual cash value of that product at the time of the event, determined by age, essentially, is what makes the ACV what it is. So it's that actual cash value. It's what you lost at the time of the event, and the insurance company, that's what they give you a check for, with a caveat. And I'll explain that in a second. But that's what that check is for. Hey, this is your actual loss, so this is what I'm going to give you up front. That's generally in the form of the first check, all right? Next one is the RCV. It stands for Replacement Cost Value. So that would be the actual cost to replace that product in its entirety and make it brand new again. So let's just say that your roof had depreciated 50% from 20,000 to 10,000 over the course of 10 years. The storm event happened, your ACV is 10,000. We just discussed that part. But to bring it back up is another 10,000. $20,000 is your RCV. That's the replacement cost value of a brand new product, brand new roof. That's your RCV, okay? The next one is the DEP, or depreciation. And there's two different types of depreciation here. It's called recoverable and non-recoverable. So that depreciation is how much that depreciated over time, right? It's over these last 10 years, how much, what was that value that it had depreciated based on age? And so that's what DEP, or depreciation, means. Now, like I said, there's two types of depreciation. There's recoverable and there's non-recoverable. And that depends on the policy that you have and sometimes the item or the product that they are evaluating the value for. Recoverable depreciation means that the insurance company is willing to pay you or compensate you for that depreciation that had occurred as long as you actually replace that product. The non-recoverable depreciation means the insurance company is not willing to compensate you for the depreciation of that product over time, even if you do replace that product. Okay? Recoverable, they'll pay you for it. Non-recoverable, you're on your own. Okay? And at the very end, I'll go into how this all ties together. The DED is also the deductible. Okay? The deductible, there has been debate about the deductible for as long as insurance companies have been around. The deductible is the amount of money that you came to an agreement with your insurance company that in the event of a storm, you would be willing to cover. That was your agreement. When you opened up your policy, you sat down with your insurance agent and they figured out all the coverage. They said, okay, if you're willing to cover this much when an event happens, then we'll put your policy premium at this much. If you're willing to cover more, we'll drop your premium. If you're willing to cover less, we'll increase your premium. So it's kind of like this balancing act here. But regardless, it's an amount that you agreed that you would cover in the event of a storm. Now, I'm going to pause there for a second because there's been debate over what that actually means in terms of where does that go, Who does that go to? Who's responsible for paying that? How is it paid? When is it paid? So when it comes to the deductible, the insurance company doesn't care. They don't care how that money comes out of your account. All they care is that you're responsible for it. Okay? You can pay that to whichever contractor you want to that's working on the house. Insurance company does not care. Generally speaking, you can do one of two things. Either one, you can give that to the contractor that's doing the biggest item on your claim. Or two, you can spread it out depending on how big those items are. It doesn't matter as long as the contractors are being paid in full and you are fully covering your own deductible. Now, what's really important to keep in mind here on the deductible, you paying your premiums doesn't count towards your deductible. Okay, you actually physically have to pay your deductible. When your insurance company sends you a check, they're going to say, oh, the ACV amount, which is generally your first check, is $10,000, but maybe you have a deductible of $1,000. They're going to send you $9,000. And you're going to say, oh, well, it looks like I paid that already. I've already covered it. I mean, because they sent out less. No, that's how they are ensuring that extra $1,000, which is your deductible, actually comes from you. Okay? That's how they do that. So that deductible is what you agreed that you would cover, that portion of the project that you would cover, that goes to the contractor and it goes out of your bank account. It is not supplemented by the insurance company. It's not covered by the contractor. We as a contractor cannot cover your deductible. It is a felony to do so. I cannot stress that enough. It is a felony for any contractor to cover your deductible. Okay? It's illegal. If the insurance company finds out about it, you don't have insurance anymore. If anybody finds out about it on the contractor side, contractor doesn't have a license anymore. It is not worth risking it to cover your deductible to do you a favor, because it actually doesn't help anybody out. It doesn't help us out at all. So deductible, your responsibility. Okay? Moving on, SUPP, supplement. So the supplement is any item that is on a claim that was missed by the insurance company. And it could be missed for a variety of reasons. Maybe they didn't realize that there was a code upgrade. Maybe they couldn't see what was going on underneath the roof, and therefore they wouldn't have known to include that product on the claim. So, and there could be other things. They could have just flat out missed it. Who knows? But the supplement is something that needs to occur on that roof to bring it up to like new status that the insurance company in their policy agrees to cover, and they just forgot to include it or didn't get a chance to or didn't know to include it on the policy. And again, that's where a good contractor comes into play, because they need to be able to recognize that. They need to know the difference between what's a supplement and what is something that has to get done, but the insurance company actually isn't responsible for doing it. And there's a little bit of a gray line there. But a good contractor is going to be able to sit down with you, go over your policy, go over your claim, and let you know, hey, this item is supplemented. We're going to go after your insurance for it. Don't usually have any issue getting that covered. Usually permits, things like that. Maybe drip edge if it's required, or ice and water shield if it's required, but it wasn't there prior. That falls under something else though, in case if they didn't miss it. Or if it's something that, yes, this needs to get done, but unfortunately insurance company is probably not going to cover it. And that's things like crickets, maybe. And cricket is just a structure that you build onto the roof to help divert water around a vertical surface. Not always is the insurance company going to cover that. Think of things like the house was built a certain way, and maybe the climate's changed just enough that we get a little bit more rain, and now the way that house or that roof was built, it's not conducive to withstanding that much rain or snow buildup or something like that. Well, that's not really the insurance's responsibility. That's how it was built. And you might think, you should cover and bring it up to code, but that's not, they're not at fault for something being built incorrectly in the past. So that's knowing the difference between what is a supplement and what the insurance does agree to cover versus what's not their responsibility. The last one down here is PWI. That means paid when incurred. Those are items that the insurance company has recognized you do need this, and we are willing to cover it once you get it on there, but you don't currently have it on your roof, so we're only going to pay it out when you prove to us that you did it. Those are things like code upgrades, like drip edge and ice and water shield, things like that, where the insurance company knows it has to go up there, but they're like, well, you don't currently have it, so we can't depreciate anything, we can't valuate it right now, so tell you what, we're going to put this arbitrary number next to it and say this is what we think it's worth, but you're not going to actually get that unless you do the work. So that's called PWI, or paid when incurred. And on an insurance claim, you're going to see maybe a grayed out line item or a crossed out line item. Those are paid when incurred. That doesn't mean that the insurance company saw it, put it on there, and then was like, no, we changed our mind, we took it off. No, that just says that, hey, you don't currently have it, we know you need it, prove that you actually did it, and then we'll pay it out, okay? So how does this all play together then? So if you look down here, we've got ACV minus deductible equals first check. So that's how the insurance company can ensure that you pay your deductible. Your ACV amount, they take off your deductible from what they're willing to pay you, and then that's how they make sure that you actually pay your deductible, okay? So let's say, again, we're going back to that first example, the value of the roof was $20,000. It depreciated 50% over the last 10 years. Storm hit. ACV amount is $10,000. Your deductible is $1,000. That first check coming to you is going to be $9,000. Okay, it's going to be $10,000 minus the $1,000 your deductible, and that's going to be that first check that you get. Okay, the next one, deductible plus your ACV, which is your first check, plus the depreciation equals the RCV. So once we get the actual work done, you can add up the ACV, the actual cash value, and the deductible that you're responsible for, and the amount that it depreciated over time, and you get the replacement cost value of that product when you go to get the work done. Okay. Now, oftentimes, depreciation alone will be your second check that you get from the insurance company after the contractor has invoiced the insurance company. That depreciation amount is going to be your second check, and it's going to be the recoverable depreciation that is on that second check. The non-recoverable depreciation you won't see. You can't even argue for it. They've already determined it's not recoverable, okay? So that second check will be your recoverable depreciation once the contractor has proven to the insurance company that the work is completed. And then down here at the very bottom, these are if there's supplements and if there's paid when incurred items, then the depreciation plus the supplements plus the PWI is going to be the second check or additional checks. There are times where the insurance company will release the depreciation on that second check, and then they might follow that up with a third check that includes PWI and then a supplement or a combination thereof. So that's all the terms, the main terms that are related to your insurance claim. You got your ACV, you got your depreciation, you've got your deductible, and you got your RCV, your supplements, your PWIs, and all of that should be something that your contractor can sit down with you and discuss in further detail if you have any questions about it. All right, so I really want to dispel this myth about getting multiple bids from multiple contractors on an insurance claim. I know that there are some insurance companies out there that encourage you get X number of bids. Sometimes it might even tell you get 5, 6, 7 bids and pick the middle one. Now, the first problem with that is it doesn't matter the quantity of estimates that you get. If the quality of those contractors aren't good, the low, the middle, the high, they're all going to be bad. It's like if I were to tell you, go find 10 contractors, 10 roofing contractors on Craigslist.com and pick the middle bid that you get. If you're finding a contractor on Craigslist, it's probably going to be bad regardless of how much it costs you, okay? The other thing to keep in mind is that just because it's a low cost up front doesn't mean it's going to be a low cost over the long period of time, okay? So that's the first thing. Quantity does not equal quality, okay? The next thing around this myth of getting multiple bids, especially on an insurance claim, is that it really doesn't matter what, as a contractor, I bid on an insurance claim. It really doesn't matter because the insurance company is going to have their own estimate. They're going to come up with their own figures and their own values. I could bid you $1. I can get your roof done for $1. And it doesn't matter if the next guy says $100, the next guy says $1,000, the next one says $10,000. When your insurance company says, we'll cover it for $12,000, all of us are moving our bid up to $12,000. The only one that might not move their bid is the one that's at $15,000. He might not drop his down to $12,000. And the reason for that is if he's at just north of that $12,000 mark that the insurance company is claiming they're going to cover it for, it might be because they know something the insurance company might have missed. And if they're higher than the insurance company, then they have the freedom to go figure out what is it that you missed, and let's make sure that you get the coverage that you deserve. Okay? Now, if I'm under, and I'm going to bid it out honestly regardless. So I'm going to put together my own retail quote regardless. Retail is a non-insurance quote. It's if you wanted to get your house done out of pocket. Okay? I'm going to put a retail quote together. I'm going to compare it to what the insurance company says. That doesn't mean that's what it's going to end up being. Okay? Let's say, for example, that my retail quote on your roof is $10,000. Insurance company says we're going to cover it for $12,000. Great. I, as a good contractor, am not going to say I'm going to pocket that extra $2,000. Cool. Hey, happy day. I've got extra money in my pocket, bigger profit margins. No, I have profit margins that I want to protect, but if I'm good at $10,000 for my profit margin, then let's get you an upgrade. If your insurance company is saying, I'll do $12,000, great. Let's see where we can upgrade you. I'm still protected. I'm still fine. I'm not going to be greedy and say, give me an extra $2,000 on this project. No, let's give you a better product. Now, if I'm at $10,000 and the insurance company says, we're going to cover this for $8,000, I'm not going to move my $10,000 quite yet. First, I might drop it and see, all right, how does that really affect our profit margins? But the reality is that I know my numbers, and I know what a house needs. So if the insurance company is coming in a little low, they probably missed something. And it's something that we should probably find and address to make sure that you're getting the proper quality of work that you deserve. So when your insurance company or anybody else says, get 5 bids, it's an insurance job, cool, get 5 bids, it doesn't matter. It doesn't matter at all. Now, I might put together a preliminary estimate for the insurance company because this process can take some time, but that's only effective if that preliminary estimate is built in the same language that your insurance company is going to build their estimate out. Because at that point, we're taking it upon ourselves to do the work. We're pulling all the measurements, we're taking all the photos, we're putting all the materials together into that one quote, that one estimate, and then we're going to build it out in the same software that your insurance company uses and give that to them and say, hey, this is what we found. I really hope you're going to be close to that. We're right on it because we did all this work for you and this is what it should be. And that might help us avoid supplements down the line, but that doesn't always mean that there isn't going to be additional work to do later on. But I say all of that to say that if you want all of your contractors, you want to get 3 bids and compare them all, contrast them all, it's all going to be for naught as soon as the insurance company releases their numbers and says what they're willing to cover it for. Because we're going to want to get as close to that as possible or identify why they're low. Either raise it to meet them and give you some upgrades, or we're going to have to either lower ours, unfortunately, or figure out where they're missing so they can increase theirs to match our numbers. So again, it really doesn't matter. For example, if the insurance company says, let's cover this for $10,000, I'm at $12,000, the other guy's at $8,000, and you're like, I want to go with $8,000 because, you know, if insurance is covering $12,000 and this guy comes in at $8,000, I get the difference, the $4,000. That's not how that works, okay? Whatever you invoice the insurance company's going to match. So if they're at $10,000, I'm at $8,000, and you go with me, and I don't increase it to $10,000 to get you that upgrade to max out what they're willing to cover, and I invoice them for $8,000, they're going to release $8,000 minus your deductible. They're going to leave it at that. They're going to pocket that extra money because in their case, their eyes are like, oh, well, it only cost you that much to do it. Well, then all right, we'll go with your numbers. Let's go with what you can do. And if the contractor does that and it's going to cost $8,000 and they bill them $10,000 just so that you can pocket that $2,000, that's fraud. So you want to be wary of that. Okay, don't go with a low bid because you think you're going to come out on top. That's fraud. Okay, so the best case scenario is let the contractor come out there, do their inspection, identify if there's damage, advise you on opening a claim or not, have the insurance company come out, do their own inspection, build out their estimate, and the contractor insurance company is going to compare and contrast. We're going to find where we can meet middle ground, we're going to come to an agreement, and now we're going to do the work that you need to get done on your house. That's the best way to go about it. So don't fall into that trap of I need 5 bids, I need to pick the middle, I need the low guy. Don't fall into that trap. Quality is far, far better than quantity. And that's even the case on retail jobs as well. All right, so now I want to kind of dive into a little bit about what happens on the insurance side of things, like what happens behind the scenes in the insurance world when you open up a claim. And I'm going to give you a disclaimer here before you dive into this video too much. This is not intended to degrade any insurance companies or any of their processes. This is just the reality of the insurance world. And so it just kind of helps us prepare for it and know what to expect. Okay, so the first thing I want to dive into is that an insurance is a for-profit business. Okay, so they do need to protect their own assets. So their name of their job is to take on risk. So in order to do that, they need to find a way to mitigate a lot of that risk. That's why you see premiums go up over time. You see policy changes over time. So it's just because they are a business whose sole job, sole reason for being around is to take on people's risk. So in order to stay profitable, they need to find a way to hedge that risk somehow in some way. So don't be surprised when things change over time. That's just the way it works. That's the nature of the business. Okay. The other thing that I want to point out is one of the ways that insurance companies do make money is through investments. It's not that you give them money every single month and you tell them, hey, I really hope you don't have to give this back to me. And they're like, yeah, sure, I absolutely agree. They're not putting that in their back pocket or into their bank account and hanging on to it for a rainy day or for when a storm comes. They're investing that. They're going to invest that money, and while your money is sitting with them, they're going to accumulate more wealth based on the investments that they have. That's just how the insurance world works. The longer that those investments can stay active, the more money they can stay in there for a longer period of time, the more return they actually get. Okay, so keep that in mind, because there are times where insurance companies will try to sort of seemingly drag their feet a little bit or drag out the process a little bit. And it could be, I'm not going to get all conspiratorial here, but it could be because they want to actually accumulate a little bit more wealth from their investments. Now, having said that, there are insurance companies that they have their own internal policy where they have to get done with the claim as soon as possible. They have to work through it as soon as they possibly can. Okay, so you've got both sides of the coin there. There are pros and cons to both sides. Okay, the pros that taking a little bit longer is that we've got a little bit more time to plan. We got a little bit more time to identify if things are missing. Okay, the pro to the quick side is that we can get through the claim a little bit faster. You can get a new roof a little bit faster. You don't have to worry about it degrading. You don't have to worry about having literally the thing that's keeping your entire house and your biggest asset dry and in good shape is deteriorating. You don't have to worry about that as much because you can get through that claim a little bit faster. The downside to an insurance company that takes a long time is that the opposite of what in the other scenario, right, is that you're sitting there with this damaged piece of equipment on your house that's literally protecting your entire house, your likely biggest asset, and it's taking a long time to get that done. The downside to a quick claim, getting through quickly, is that you don't really have as much time to really dive into all the details and make sure that everything is all covered. Sometimes we got to get in and get out. So there's pros and cons to both sides. So having said that, and just getting that out of the way, I want to say that most of the time an insurance process can take a little bit longer than you might want it to, a little bit longer than you might expect. And the more trades that you have in that insurance claim, the longer it's going to take to get everything done. Okay, it is a construction process. it is getting covered by somebody else for the most part. And so they want to make sure that everything is going to be accurate and get done correctly. So that process can take a little bit of time, and most of the time it does. Okay, so what happens is you open up that claim, insurance sends out their inspector, they take a bunch of photos, and they take all those photos and they send it back in to the claims department, or the just the desk adjuster is what they're called back at the insurance agency. And they just kind of look over all the photos that were taken, and they make their own determination if there's damage or not. Okay, now there are times where they're going to deny a claim that should not be denied, in which case the contractor who's representing you is going to do what's called a supplement. They're going to build up some supporting evidence, send it into your insurance company and say, oh, no, this should be covered and here's why, in which case your insurance company is going to go back and forth, and then they're going to either say, you're right, let's do this, or they're going to say, nope, I still don't see it. Okay, now if they say, nope, I still don't see it, you got some options still. It's not all said and done at this point. We can do what's called hiring a PA, a public adjuster. They're not actual attorneys, but they act like attorneys when it comes to trying to get more coverage from your insurance company, or at least get the coverage that you deserve on your property. And that process can take quite a long time. I've seen some that take a year or more just to get through that process. So understand that when you open up a claim, there's going to be a little bit of back and forth. There's going to be a little bit of communication back and forth between the contractor and the insurance company, maybe the supplementing team in the insurance company, maybe a public adjuster in the insurance company. There's a lot of people trying to pull for you to get this covered for you. And every single time that we have to elevate this to another level, it's going to take a little bit longer to get it covered. Okay? So there's that first part. Let's say that everything gets covered. The insurance company is going to issue the check. We've talked about that in another video. And they're going to tell you what all they're covering. And then we're going to get the work done. And then once we do that, we're going to invoice the insurance company again. They're going to either release that check right away, or they're going to come back and say, hey, some of these numbers don't add up. Why do I see it this way? Or why did you invoice it that way? And there's going to be a little bit further communication between the insurance company and the contractor. So again, that process can take a little bit longer. We go back to what I said in the beginning of the video. Remember that some insurance companies, they want to drag this out. Okay, so they might actually drag it out, and it's up to the contractor to be able to fight for you in an efficient way and try to get this covered as quickly as possible. So on the insurance side, they have a lot of people that's involved in the office, just looking over all the information, looking over all the damage, looking over all of the invoices that the contractor is sending in, communication with you, communication with the contractor, maybe even communication with your mortgage company if you have one of those. If your house is through a mortgage, they might be in communication with them as well. So there's a lot of people that are involved with getting this project from the start to the finish. So it's not always going to be real quick. Sometimes it's going to take a little bit of time. So as a contractor, we ask that you just be patient, check in all the time. If you haven't heard from your contractor in a little while, check in with them and just see, hey, have you heard anything? Most of the time, the insurance company is going to reach out to you as the homeowner before they reach out to the contractor, even if you have that representation agreement in place. Reason being is they likely know that you don't know much about your claim, and they want to maybe drag their feet, maybe drag it out a little bit. So just keep that in mind. Stay in touch with the contractor, stay in touch with the insurance agent, and every chance you get, make sure that the insurance agent is aware that your contractor is representing you. There may be times where your contractor says, hey, insurance company's not listening to me. Despite the fact that we have an agreement together and you give me permission, they still just aren't listening to me. So your contractor might coach you on how to have a better conversation with your insurance agency or with the adjuster, because they're more likely to be receptive to you asking for something than maybe the contractor asking for something. So just stay in communication with your contractor so that you can kind of get through this process a little bit quicker, and understand that sometimes it does take a little bit of time. All right, so let's talk about actually getting the work done. What benefits can you get when you get the work done? What options do you even have in getting the work done? I'm going to go into that. And also the other side of it, what happens if you don't get the work done? Okay, So the first thing I want to talk about is actually getting the work done. What products do you go with? How do you make that decision? Okay, the first thing you should know is that your insurance company is going to cover what's called like for like, meaning what you currently have up there on the roof, the quality of it, that's what they're going to cover. That's what they're going to pay out for. So let me give you an example. 3-tab shingles. Probably one of the lowest grade or lowest quality shingles is a 3-tab shingle. It has no impact rating, it has no wind rating. Most of them don't have any fire rating or anything along those lines. If you have a 3-tab shingle, your insurance company is going to cover replacing it with a 3-tab shingle. Is that the best option? My argument is no, it's not. And the reason for that is they have better shingles nowadays, and shingles that actually give you a discount on your insurance premiums. Remember in past videos where I said those premiums go up over time due to various reasons? Even inflation, doesn't matter what it is, they go up over time. You can count on that. But if there's an opportunity to actually reduce that cash burden on yourself just by upgrading upgrading your shingle, my advice is do it. And the reason is there's going to be a point in time where you won't be able to get insurance to cover your roof. If it gets so old, they're not going to cover it. They're going to drop you to what's called an ACV only policy, where they don't cover any of that depreciation. Okay? So if you have an insurance company that's willing to cover 50, 60, 70, 80, 90%, 95, depending on what your deductible is, percent of the roof, go that extra mile. Pay a little bit extra if you can swing it and upgrade to a Class 3 or Class 4 impact rated shingle. The benefit is you can see upwards of about a 30% discount on your insurance premiums for doing that. Okay, so this is an opportunity to get a much better roof without paying for the whole thing. It's a great opportunity to be in. Okay, another option is that you could actually finance the entire project. So not everybody has enough saved up to cover the deductible, especially nowadays when deductibles are becoming a percentage of the covered value of the house, no longer a flat rate. So those deductibles are becoming bigger. They're a much bigger burden to carry. And not everybody has the money saved up to cover that. They don't plan for that kind of thing. And it's just the nature of being a human being. So an option is to actually finance the entire project. So we already know insurance is going to cover X amount for your roof. And we already know that you have to cover X amount, whatever your deductible is. Well, if you finance an entire amount, you don't have to pay out of your bank account that deductible. You can spread that out over a number of years and actually pay that off. And a large chunk of that is going to get paid off immediately as soon as the insurance company releases that check to you. And that way you don't ever actually have to sign a check over to the contractor because you're financing the whole deal. They're getting taken care of and you get to spread out the cost of your deductible over a period of time. I mean, think of it like on Amazon. You can finance $100, $50 items on Amazon, and a lot of people do that just to spread out money. Why not do that on a multi-$1,000 deductible, or even more than that if you have to cover the depreciation plus your deductible? So that's also an option, and it helps you be more prepared for this kind of a project instead of kind of being scared of what kind of financial burden it's going to put you in. Another thing that people like to do sometimes is if they've got student loan debt at some pretty bad rates, or they've got vehicle loans at pretty bad rates, or credit card debt has some pretty bad rates, you can finance this project. You know the insurance company is actually going to release a certain amount on this project back to you. Finance it, spread out that cost of the project over a long period of time at a really good interest rate, and take the money from the insurance company and pay off credit card. Or take yourself on vacation that you haven't been on in a long time. There are benefits for you when something like this happens. Okay? So we've gone over different shingles, improving the actual quality of the roof and what that can do for you in the long term, how this is actually a really good time to upgrade the quality of the roof. We talked about financing the project to put yourself in a better cash or financial position because of this loss. So these storm events aren't necessarily a bad thing all the time. They might actually be able to help you out. Now, what happens if you don't get work done? Okay, now that's where things get pretty hazy. So if you decide not to get the work done that the insurance company is covering, then the next time an event happens, those items won't get covered. So let me give you an example, okay? The insurance company releases that ACV amount up front. We've already discussed that. That's yours, right? Now, you can turn around and get the rest of the roof done, and then they'll release the depreciation to you afterwards. Or you can choose, you know what, I'm just going to take the ACV amount, like that's the amount that I lost on that product. I'm just going to take that, I'm going to pocket it. Okay, you can do that. You have the right to do that. But the next time a hailstorm hits on that roof, you're not getting anything from the insurance company. They said, hey, we gave you the chance, we gave you the opportunity, and you did not actually get the roof done in the before the expiration of that claim, so you've lost that privilege, so to speak. You don't have that entitlement anymore from the insurance company to get that covered. Now, there are going to be things on the actual claim that you might not want to get done. Maybe you don't want to get the fence restained if they're covering that, or maybe you're like, that's not that big a deal, I can do it myself, or maybe you don't want to get the gutters done. There's some dings here and there, but it's really not that big of a deal to you. You don't want to get that done. That's totally fine. You can take those ACV amounts of those products that you aren't getting done, and you can put it towards an upgrade on the roof to help kind of offset that additional cost to get that upgrade and just make it a little bit better to do it. Or you can pocket that, and it ultimately does help sort of alleviate the depreciate or the deductible, it alleviates the burden of the deductible from you. But just know those items won't be covered in the next storm. And to ask your contractor, hey, could you invoice the insurance company for that anyways? And that's fraud. Okay, we want to avoid that at all costs because you'll lose your insurance and the contractor will lose your license. So just keep that in mind. Any contractor that say, I'll cover that deductible for you, or I'll invoice them for those items and you can just pocket that, it'll help you out a little bit. That's fraud. Don't bite into that. Okay, trust me, in the long run, it is not worth it. There are better strategies to take advantage of a claim than doing something fraudulent. Okay, so you've got options when a claim occurs. You've got options to increase the condition of your roof, increase the position of maybe your financial situation at that time, and so use it to your advantage and talk to your contractor to see what those advantages might be. So now all the work is done on the project and it's time to close out the claim and move on with your life. So what is the process for that? Well, the insurance company wants to know what were the decisions that you made during the process of building the roof itself. Did you upgrade your shingle? Because they want to know, do we owe you anything back on your premium? Do we owe you a lower premium, whatever that might be? So what generally happens at the end of this claim process is that we, as the contractor, fill out this form for your insurance company. We may include the inspection from the city that it's passed. We may include the permit if they ask for it. But what they want to see is, what did you end up actually putting on your roof? This tells the insurance company what you did and that you actually did something, right? So we'll fill out the sheet. Let's assume that you actually got an impact rated shingle, because generally speaking, that's really the only time you need to fill out this sheet is when you get an impact rated shingle. So we fill that out, we put the date in there, we put in what the product was, and we submit that to your insurance company. There are also times where if we are able to provide you with an extended warranty with the manufacturer based on what we installed, and that extended warranty can go into your claim file and go into your insurance policy and give you a benefit there, they might want to see that as well. So if that's the case, we handle all of that on our end. We get that information over to your insurance company, and then your premiums should be affected very shortly afterwards. It's a good idea to always check in with your agent and let them know, hey, the work is done. Hey, our contractor filled out this paperwork. Did you receive that? Can we sit down and go over the new policy to see what's changed? If you do that, then you know that you can stay on top of your policy and make sure that the necessary changes are actually occurring. And that's how you close out an insurance claim. I want to thank you for listening to all the videos that I made in this insurance process series. I really genuinely hope that it helped you in some way, maybe understand the insurance claim process a little better, maybe it answered a lot of the questions that you might have already had, or maybe it's inspired you to actually open up that claim because maybe you need one. Whatever the case may be, please feel free to reach out to us. We'd be happy to help you out with the claim. Even if we're not the contractors that do the work because maybe you're not in our area, we're still happy to discuss the actual claim process with you and help you make the best decision moving forward. Thank you for listening, and we'll see you in the next series.